We're doing we're feeling old. I was just telling Brandon
Yeah.
earlier, I'm feeling old.
So there
When
there is an age where jumping into a was it a big leaf pile? Or are we
it was a
talking
really
like
big leaf pile. It was really,
those
really big.
3 feet, 4 feet?
Yeah, about 3 feet high, 4 or 5 feet wide.
So
When
so
you're
Blake's tested the integrity, the buoyancy of a 3 foot leaf pile, and it came up wanting. And so
that is true.
he's got a
Totally
tens
true.
unit going on right now, trying to help stimulate something. We're not going to ask what, but it's an all body affair right now, trying to recoup from that leaf drop.
Yeah, I'm feeling a little sore today. It's been actually, this is like a week ago, just so you know. And here, talk about the Trump bump. You jump into the air to land and leave, and you think this is going to be so soft.
Right.
And after the age of 50, you jump in the air and there's no cushion in there. You hit the ground. So we talk about the Trump bump pushing things higher. Well, that's me jumping into the air, into the leaves. And sooner or later, you come down, don't you?
Yeah, I mean, there's some leaf fright. Maybe those leaves kind of just said, "Whoa," and kind of backed off, and it's like diving into a crowd, and like nobody wants to hold you.
Yeah,
But
a crowd surfing dive, and no one's there.
that's right. Well, anyway, let's dig in here. So let's kick things off with some inflation. We had some Powell comments yesterday, but let's kind of dissect have you dissect the inflation data, Blake.
Yeah, so I've got the PPI here, and I'm not going to break it down into every little bit of it, but I'm going to start with the PPI, even though that one is released after CPI.
Mhm.
It's more kind of telling us what we can expect CPI to have because there is a lag between the two. And so when we're looking at PPI, everybody says, "Oh, look, it's everything's improved, everything is fine, and we're doing good," and they're saying that they have everything under control. But when you look at the final food, less food and energy, taking out the food and energy, where you are going with core, and I'm not a fan of core, except what I'm going to show a little bit here today, and that is that we went from point one to point three. So even even taking out energy, it went up point one to point three. And so when we look at the numbers, final change, 3.3 to 3.5 year over year, 1.9 to 2.4 change in final demand from 12 months ago. So the fact is we're seeing inflation accelerate back up. And we kind of dipped a little bit and then all the way back up. And so this number from September to October, year over year, is higher than what it looks. We just say, oh, yeah, this is where we thought it was going to be. Yes, this is kind of a softer inflation number, maybe softer from what we would hope
Mhm.
for cutting rates, but not when we're talking about the direction, the trajectory, the acceleration. This is an actual acceleration in costs across the board. And the only thing that was negative was food and energy. And so it's great that us as consumers, we're going to hopefully get a little bit of a reprieve from food and energy. But did you see them cut the prices at the gas station 5% over the last 3 months? Did you see
I,
your grocery bill drop 10% over the last year?
yeah.
And it's
Yeah,
not there.
yeah, it's tough. I mean, these, there's think about like actually like real what you pay at the pump in the West. We don't have a lot of refineries, so
Mm.
again, prices tend to get really sticky on the way down. And I'm not necessarily so certain that oil prices are really going to go down a lot from here unless we really start to see recessionary type pressures. But if we look at some of the headlines here regarding retail sales today, came in a little softer. Auto sector appears there was a Trump bump
Hmm.
in the auto space. We've seen a little bit of a bump there. Retail sales contributed because of autos. X autos were down. We're below expectations. We see PPI, we get CPI up here, came in fully in line with expectations, but still above the trend. Now, Powell came out yesterday and seemed a bit hawkish. Boy, if we look at kind of the rate odds here for this is for December, this is the next meeting. A day ago, 38%. We did see a little bit of a bump here in terms of keeping rates the same at 4.5 to 4.75%. Not much of a shift as you go out in time, though, but a little bit of a shift. And market saw some weakness yesterday as a result.
Right. Well, and just one last comment on CPI, that justification, the result is energy from 12 months ago, energy is down 12%, and uh, fuel oil, which is, everybody talks about the seasonality of oil and the heating, it's down 20% year over year.
Yeah.
And so, that's, I just look at that and say, So we're not going to get the seasonal bump, but 20% and 12%. If you take food and energy out again, you have transportation services up. You have 8.2% increase there. Medical expenses up 4%. Services up 5%. Shelter up 5%. Well,
Yeah.
roughly. And the year, and I'm just looking at the adjusted ending October on
Yeah.
the CPI, which I don't have that slide for you, but I'm talking CPI. So the consumers are still being stretched, and I don't think, like you said, it's very sticky on the way down. We didn't see that massive cut. And even if we did, what percentage of your month to month expenses are the difference at the pump? But when you
Yeah.
went from 350 down to $3, even if you save 20% roughly, is it offsetting all of your other expenses? So
Yeah, and on the again on the data on Powell's comments, the market showed some weakness yesterday. I mean, there were signs ahead of this, right? That I mean, after the election, we never saw skew come down. I mean, again, we're still very, very elevated. It's just saying, look, be careful of the downside, right? Skew jumped up yesterday to 147. Anything north of 130 is high. So what we're seeing is that hedges are being held, right? We're not pulling the hedges. We're not trying to capture the upside in the market to a high degree. When you look at the VIX dropped pretty significantly down to even below 15 over the last few weeks. Something we talked about, I talked about on my Monday's video before the election. We got the pre-earnings dump, which pushed the market higher. Where do we go from here? Again, all of a sudden we have the VIX at 14.6. The 3-month VIX was really elevated, I guess I should say, versus 3-month here. Was really elevated about 16.68. We hit that kind of magical number, 19-20% higher than the spot VIX. Everything's pointed to a significant increase in volatility in the near term here, which brings us back to the Trump bump. And we had some big time moves in cryptocurrency and other related areas. Is it over, Blake?
not yet, but I think what you're going to see is you're going to see rotation. I mean, when we look at the crypto thing, I mean, you can't tell me that the Department of Government Efficiency was not intentional to create an extra lift around Dogecoin.
Right, right.
It's just marketing, right? If it's top of mind, if you're gonna go buy coins, if you're gonna buy any type of crypto, and you got Doge in your head because of the Department of Government Efficiency, that's something you're gonna consider that maybe wasn't
Yeah.
on your radar. But anyway, I don't think
We're
we're quite there with the crypto yet, but I do think that we are starting to see weakness in a lot of the other sectors that have been overly stimulated, overly pushed higher. Palantir is a great one, Tesla as well.
Yeah, I mean, Palantir, we kind of have a little bit of an internal kind of discussion on Palantir. I mean, it went up 50% in a week.
Yeah,
I'm like, I mean, can we extrapolate these moves out indefinitely? It's really, really hard to do. Probably the poster child is MicroStrategy. I mean, MicroStrategy's gone from 115 to 350 literally within a couple of months. Yeah, in my group, my room, we took a nice trade and MSTR made 450%. Then we talked about going long coin before the election. But now what? I mean, can we really extrapolate these moves out indefinitely? And when you think about MicroStrategy, what is MicroStrategy's business? Anyone know in chat? What does MicroStrategy actually do? And this is kind of a microcosm, right? What does
yeah.
MicroStrategy actually do? Cloud security stuff. They've got some approval to do government work.
I
Do
thought
you
they were a
realize
beverage.
what?
I thought they were a beverage.
Their beverage, yeah.
Monster
Their
Energy.
sales were down 10% last quarter.
Yeah, well, and they have a negative 100 and whatever PE.
Right, right. They don't make money. Their cash flows are negative. But what do? Why did they go up? They borrow money and buy Bitcoin. So think about it, right? We can talk about Mara. Mara actually mines it, right? They invest in equipment and mine Bitcoin and maybe some other cryptocurrencies as well. They don't make money, and they're manufacturing Bitcoin. We have MicroStrategy that borrows money and issues shares of stock so that they can buy Bitcoin. They're paying full retail price. Is buying Bitcoin a business? The answer is, of course, no, it's not. Right? There is no business here in terms of Bitcoin. They go out and
Are
borrow
they an
money and buy
investment
Bitcoin.
firm? Or
What?
they've decided they're an investment firm, a crypto.
Yeah. I mean, so
They're
again,
Kathy Lean.
why
They're
don't
taking a
you go
page out
out
of
and buy?
Kathy Lean. They're Kathy Lean's book, right? Oh,
Well,
not
why don't we just go out and
or
borrow
Kathy
money
Woods.
at very high rates and buy Bitcoin ourselves? So the hard thing is this stock's gone up a lot. And yeah, I've talked about how to play this, and it's been great doing some out of the money spreads. Again, one spread did 250%, great. But can we extrapolate this going up indefinitely? This company's basically a leech on the system, issuing shares of stock, issuing debt. They plan on borrowing or raising $42 billion in the course of the next 3 years to buy Bitcoin at a full retail price. I mean, this is the Beanie Baby craze,
Yeah, I was gonna
Blake.
say this is just the greater fool's theory again.
It's a greater fool's theory, right? Is our investment strategy based on the greater fool? So the point is that these kinds of stocks are designed to be rented, not owned, right? Rent the rally. Okay. That you're done says average cost of 45K on Bitcoin. But it doesn't matter though, right? What is the long run return on Bitcoin? It's going to be negative, right? We may have some revaluation here, but again, why buy MSTR? Why not just buy Bitcoin, right? Just go on your credit card, go buy Bitcoin. At least you have it, right? Because
PayPal
that's
will let you
exactly
buy
what
it.
they do. What?
PayPal will let you buy it. Just have
Yeah,
a PayPal
PayPal,
account.
go borrow money, right? Buy Bitcoin yourself. You don't need MicroStrategy because that's their business. Their core business is losing ground, right? They saw sales go down, and all they're doing is say, we don't have any cash, but we do have access to you, so we'll take your money and we'll buy Bitcoin through raising either debt or issuing shares of stock. $42 billion is their plan over the next 3 years. Can this hold up? So the point is, the discussion we had on Palantir yesterday is that if you think Palantir is going to 100 after going up 50% in a few weeks, um, Palantir may go down 80% before it goes up another 50%. Okay, this is the risk right now. So,
Well, and
um,
keep in mind that they actually have earnings, but and MicroStrategies has nothing. They're
yeah.
losing,
So
losing, losing money. So I mean, it's
right
if
there,
you think Palantir is going to fall, how much further do you think Monster? Let's see, I want to say Monster.
MicroStrategy.
MicroStrategies is going to do. So
Yeah. And so again, in MicroStrategy's paying what? So if they're going to buy, they have about 2 billion in Bitcoin right now. So we say an average price of 45,000. They plan on investing $42 billion the next 3 years. Bitcoin's at 90,000 right now. What's going to happen to their average price? You can't buy Bitcoin at a discount, right? There's no wholesale window and they're not manufacturing it. They don't have any mining efforts. All they're doing is going in the market and buying Bitcoin. Now, granted, is there a trade in MicroStrategy when Bitcoin goes up? Absolutely.
mhm.
But is this a long-term investment strategy? Absolutely not. This is a poster child of a stock that has no core business, right? Other than borrowing your money and buying Bitcoin, and then you have trying to get you to buy their stock. That's it. Okay. But hey, look, we saw
Why buy Bitcoin directly when you can buy inefficiency at government type levels?
right. I mean, so again, this is a microcosm of a lot of stocks that really got a bump here, right?
Mhm.
That there's not they're massively overvalued. They're not something you can really hold for long periods of time without taking on extraordinary volatility. This is why it's called diamond hands, right? Because you better have diamond hands to hold on. Because when this thing goes to 100 or 50 at some point, you're going to be wondering, okay, can I hold through? I bought it at 350. But rent the rally, right? There are trades on MSTR. We took a trade here, right? We rented coin here during my sessions, but again, very, very hard. People that think that don't have an exit strategy here, it's going to be really, really hard when all of a sudden this thing breaks down massively because it will. Doesn't matter what Bitcoin's doing, right? They've got 2 billion in Bitcoin. Their valuation's way above that. And again, their earnings, their core business is doing very, very poorly. and they're not generating any cash from their business. They're just borrowing and borrowing and borrowing, issuing shares of stock. And when the borrowing dries up, they're going to issue even more shares of stock just to make up for the deficit. Okay. So what we're saying is there's stocks that you rent and there's stocks that you own for longer periods of time. So this is why we're talking dividend aristocrats here.
And this is,
Diamond Nads, Shane says, yeah, you better have something diamond going on or a really strong tens unit to keep you going.
hey, that's right.
Okay. I
So
mean, this is the reality. So what we're saying right now is that yes, we got the Trump bump. We had stocks that, again, we're repricing Bitcoin and everyone's going crazy right now. Just stripping down. We're going down the square, right? Is
yeah.
that a core, is that a long-term strategy? The answer is no, right? We've
Well,
celebrated, we've seen the big bump, stocks have moved greatly. Can we extrapolate 50% returns in a week like Palantir? The next week's the same thing. Next week's the same thing. Markets up 20% this year plus. Again, we're up last year. Can we extrapolate 20% gains indefinitely in the future and we're never going down? The answer is, of course, no. So now we're turning our attention to companies that have a real core business that may actually be trading at a very reasonable value. It's dividend aristocrats or
where do
dividend
people
paying
go?
stocks
What do
generally.
they look at? I mean, when we talk about bubbles, when we talk about the craziness of the market, at some point, people say, I was burned by fill in your favorite bubble, right?
Yeah.
.com bubble, the housing bubble. When that happens, these dividend aristocrats can pull back a little bit, but reality is people start looking for a low risk, consistent return, and that's in bonds or in dividend aristocrats. That's where it's at. And I mean, you are absolutely the specialist in house on these dividend aristocrats. How do you find the right ones? How do you know what is a Let's start with that. Aristocrat. What does that
Yeah.
mean? Is this eat the rich kind of thing, or are we?
Yeah, well, basically, yeah. No. Well, the point is that dividend aristocrats, these are companies that have paid and raised their dividends for 25 consecutive years. They're S&P 500 stocks. So we know they are companies that have a business that has profitability, that has cash flows, and they share the cash flows with you, the investor. Okay. And so the idea is that we can potentially generate a consistent income. The S&P last this year so far is over 20+%, right?
Mhm.
Okay. Do we expect that next year?
What do you
I mean,
think?
there's something called equity risk premium, right? That means that what's the potential return of stocks over bonds? Right now, there's a zero equity risk premium, meaning that there's no real expected return in equities over and above what bonds are yielding. And a 10-year treasury bond's yielding about 4.4% right now. So if the S&P yields 4.4% next year, right, we get a positive return, not even necessarily a bear market. What do you get in on top of that? Okay. So again, MicroStrategy might go down 80% before it goes up 50%. Okay. Palantir may go down 80%. It's done it before it goes up another 50%. What about stocks that have lower risk that may have a chance of obtaining a return similar to the 10-year treasury yield, plus you might be getting a 3 to 4% dividend? Now, I'm not saying this has to be your entire portfolio, but this is something if the market's going to exhibit any weakness, and we've really been very top heavy. So a lot of these dividend aristocrats have actually come off their highs a fair bit, and it presents an opportunity where you might get a 4% dividend yield on a stock that has really good cash flows, and they're sharing it with you in the form of dividends. Okay. So you get something every quarter that can be used for income or to hedge your investment. You're just not getting that from MicroStrategy. That's basically taking money from you by buying their stock and their debt offerings and their share offerings and saying, okay, I'll just do the same thing you can do. Go out and buy Bitcoin with it. And maybe we can play the greater fool theory that people will be enamored by that possibility of Bitcoin going up. And instead of buying Bitcoin, they buy us because we've got a mountain of debt and we're bleeding cash on a day-to-day basis. Okay. You've got to make a decision here. And again, it's not to say there aren't trading opportunities in those issues, The point is that do we start to look at stuff that has a more sustainable business model that may have less volatility? So I've got a dividend aristocrats list. I'll post this in the chat. But the idea is we want companies, again, the target is companies that are paying a good dividend,
If
right?
you want to
And
give
what's
that
a
to me,
good
I'll
dividend?
post it to
Probably
both of them.
north of 3%. Go ahead, Blake.
I was just gonna say, if you want to give that, post that, I'll post it to the other two. So,
I posted it in Weiss Pub and
okay.
all right. So what's the starting point? Again, this dividend aristocrats list, we're looking at dividend. This is not super accurate in Thinkorswim. Okay. But it'll get you kind of there. We got Leggett and Platt and Ben. I mean, these are financial companies. I struggle with financial companies for dividends. They don't really have any real transparency in terms of their financials. Very hard but I'm gonna go a little bit against that with T. Rowe Price. So we look at T. Rowe Price. We back this out 10 years. Stock's down a ton. Generates substantial cash flow in excess of its dividend. We look at the stock's performance recently. We came off a positive earnings announcement, and it pays a $1.24 dividend. The yield, this may not be right either, but it is over 4% right now. And if we compare against history, and this is a means of assessing valuation, I'll just use finance.yahoo.com, but if I type in TROW in here and we go to statistics as just a very rudimentary valuation measure, just look at its current yield, which is 4.14%, and look at its 5-year average yield. So right now you're getting almost 0.75% more than its average over the last 5 years. We had a recent positive earnings here, and you're getting a 4% yield and a $1.24 quarter dividend. We have a dividend coming up. This is the ex-dividend date over here. You're going to get entitled to a $1.24. Well, what can you do? You could take that $1.24, go to 20 December, and you could come out of pocket a little bit, but just buy a 115 put. Okay, market goes down, you're locked in at 115. You can still hold it. Stock drops to 100 in the next month. You could sell that put for $15 and you're still holding the stock at that point. We did this with CVX in one of my sessions here. We bought it back here for a little below 150. We used the dividend to buy a 145 put, held through the earnings. The stock's now at 161. Our target was 165 in the near term. So now all of a sudden you had a chance to make a 10% return on CVX in a month. It's not a 50% return, but you had a stop measure, a guaranteed stop at 145. So you can kind of go through these names. A Smuckers, for example. Now, Smuckers, we saw some pre-move pulses in it, option activity coming into Smuckers back here. We've kind of faltered. We're drifting back towards 107.50. We have an earnings coming up, but it goes ex-dividend on the 15th. So if you bought the stock today, for example, you hold it through to the 15th, you're entitled to the dividend. Well, guess what? What could you buy for $1? You could buy a 100 put, right? For example, you could lock it at 100. You could maybe come out of pocket just a little bit and maybe for $1.75 buy a 105 put. So you're getting $1.08, $1.75, you come out of pocket a little bit. Now all of a sudden you're locked in at 105. Point being is that this stock has potentially significant upside. It's undervalued. It's a stock that has great cash flows. It has more cash flow than what they're paying out in dividends. You have upside here. Stocks like MDT, Medtronic. This is where you get excited and you're saying, boy, this stock just dropped a decent amount, dropped to 86. What if this thing keeps selling off? What if you could get it at 78? And right now it's paying about a 3.25% dividend. And all of a sudden you pick it out up at 78. Now that dividend's higher. Again, great cash flow companies that can pay their dividend. So you cheer stuff on. Coke, I'll just go over Coke here. Coke and Pepsi paying the exact same dividend. Their cash flows in the last year have not been as good. Their free cash flow is less than they're paying in dividends. But right now they're paying a 3% yield. What if you could get a 4% yield in Coke? How long would you have to wait? The stock would have to trade all the way down here close to 50. So if we're saying Coke, cash flow is a little bit uncertain, we want to buy the stock at 50. What could you do in the interim with your money? And I'm just looking, I'm showing, let's look at 3-month T-bills here. IRX, pulling CGI. A 3-month T-bill right now is paying you 4.4%. So all of us say, hey, Coke's under pressure right now. The business is struggling just a little bit. Cash flows are down. Hey, costs are up. Blake just walked through it. What if you could just put your money in a 3-month T-bill or short-term debt instrument and you say, I'll just hang out here. And if Coke hits 48, $50, I'm in. Okay. I know Blake's bullish on Pepsi. I think it's a great
Mm.
trading opportunity, but this yield could go higher. It's 3% right now. It could go to 4%. They're both very, very similar companies, and it's a required downside breakout, but it may go to 180 before it goes to 150. But all you got to do with dividend aristocrats over here is just say, look, what yield do I want? Okay. And right now, if we're looking at a 5-year average yield for this is for I forget now, for T Rowe Price Group. Well, let's go Smuckers and we'll move on. But if I look at Smuckers here as an example, right? It's a 3.9% yield. It's way above the 3.08. If you could have a scenario like this is a potential buying opportunity today, right? Assuming you like the company fundamentally. And whereas, Coke, Pepsi, you might look for something like this where the yield right now is 3%. Maybe you want something closer to 4%, which is towards the 10-year high for both Pepsi and Coke. So again, you don't have to get out there and rush to judgment and buy all these dividend stocks. There are some you could buy. T. Rowe Price, Smuckers, Hormel. Hormel's got an earnings coming up. It's paying a high dividend, 28 cents. Earnings coming up. What do? It's coming here. What could you buy for the next month for 28 cents? You could buy a 28 strike. You can come out of pocket a little bit, buy a 29, and all of a sudden, what? You're covered on the earnings. You have $1.50 of risk. This thing could go to 36 quick if the earnings come out positive. We saw it back here, for example. So what do you think, Blake?
I would just say this is the idea that any institution is going to do, and we really should be managing our own funds like institutions would. And they call it, your return on investment that we look at, or the comparison to those bonds, those returns there. And we can absolutely buy the bonds, but the bonds, they don't appreciate. They don't grow. They just pay your dividend, and these aristocrats, they pay your dividend and they appreciate, and your dividend can go up
Yeah.
in dollar amounts in time. And Scary was even asking the question on the leveraged ETFs that use option strategies to generate monthly dividends. Those aren't real dividends because it's not based on the growth of the stock and sharing of profits.
Yeah.
It's you're investing in an investment company. And all of these guys, the big institutions, they look at what's called IRR, internal rate of return. And they compare it to, like Brandon is doing here, saying, show me what the bonds will pay me, because that's a risk-free premium. And if I can get similar or better over here on a dividend aristocrat, I actually can get paid, and it can grow,
Yeah.
and it has a track record of 25 years of keep paying me more. That's really what
Yeah.
it's telling you. So this is why these can become amazing parts of your investments in the market when they're possibly peaking out.
Yeah.
So,
I mean, Buffett, for example, bought Domino's Pizza, but again, he owns a lot of dividend paying stocks, and he's got an extremely low basis. So he's getting a massive return. The problem is here, if you buy an ETF, you're getting a $6 dividend. If the Fed cuts rates, where's this going to go to? That $6 isn't going to stay constant because they're going to be turning over buying new securities at lower yields. All of a sudden it goes to $3. Well, you bought it up here at a higher price with a 6% dividend. All of a sudden the price goes down here because of the bond market. All of a sudden now you're getting a $3 dividend. So for ETFs, you're not going to have the stability in income, right? It's not going to be consistent because they're socializing your investment. It's just like your utility rates, right?
mhm.
When you bought your home, right? You didn't lock in your utility rates. Your utility rates are always changing over time for good or for better, for bad or for worse, right? Saying the exact same thing. But the point is, the idea is that it's always changing because you're socializing your investment or dividend strategy and you're gonna move up and down with rates over time. You're not going to establish a consistent return or a consistent income that you can with dividend stocks. All right, let's turn our attention to some bulls and bears.
Well, linking this over,
Yeah,
I'm not going to go through all of those, all of mine here, but I would say if you think that the Bitcoin and buying into MicroStrategy is a good time to go, I would say NEE, because guess what? Energy prices are going up. NEE is part of the dividend payers, the big dividend payers, because it's a utility. And if energy prices keep going higher, which they have been, and inflation's still there, and if we're going to be demanding more Bitcoin because the miners are going to pay more, if it's over 70,000, 80,000, then you're going to see the miners producing full tilt, which is a higher demand for energy. AI, higher demand for energy. So this is the
right.
one the reason why NE makes my list. And I like the
Yeah,
bounce yesterday. So
yeah. I mean, big exposure to Florida, which kind of helped them and hurt them over the last little bit. This has one of the better growth rates, 8%. Well, they were about 7 or 8% earnings growth for 5 years, which is pretty good. On Monday, there were some bearish flows into like, VRT. This is a little bit different position, right? It's higher, right? And Nextera is lower. This pays a very paltry dividend, right? Nextera pays a reasonable dividend, not an amazing one, but it pays about 2.75% plus the potential appreciation. This thing
yep.
could go up over 10% in weeks, and you still have the long-term dividend potential here. Now, I also like, TLT right now. Again, it's bid oversold right now. We have inflation. We're back against the wall. But is there some expectation we may kind of help out a little bit? Future rates of inflation, maybe, maybe not. But I do think in the short term here, and if yields go down, price of TLT goes up, it will help lift a lot of the stuff that are, again, stuff that pays dividends. And it's also beneficial for gold. And there was some significant flows into gold related companies, like some of these kind of one of my pre-move pulses that I talk about. But I like gold down here again, $39, $40 here in the near term. I think it's a bit oversold, and it held up yesterday, and right now it's up slightly this morning. But I do like for a little bit of a pop to 39, $40 in GDX.
I like it too. I'm watching the dollar as far as that timing of GDX and bonds. Bonds are selling off, and J9 just commenting on bonds dropping again. I'm just looking for it to clear a 2-day high on bonds, but dollar index, look at that. Look at that.
Yeah,
When people, and like we've talked about in the deep currents, cash is a position. Cash is a long dollar position. So as
and
long as
so is
that
Bitcoin.
dollar, that's true too. But the cash is a long dollar position. So as we're looking at that and we see the dollar reaching these highs, at some point the dollar is going to pull back. It's just comparing it against other currencies. It just tells us how bad the other currencies are doing. So, but TLT, IEF, I'm just waiting for a follow through, and we haven't really seen a higher close through that off those bounces. I need it to clear and close above those highs. So yeah, 91, 90, maybe 92, and I'll be stepping back in.
Yeah. So again, just look for a little. You can again with this, and we're down so much. You can look for a little bit of price confirmation, right? Not a lot. 92 is not a big move. But again, you can then, but the potential as we look at, over the downtrend, 96, 98, that's not a bad move in TLT. So you're buying it on the cheap right now. Um, okay. And so let's take the other side of this. I mean, again, Trump bump. What about Trump slump? We look at IBB. This is what I
Yeah,
talked about last Friday in my session. We talked about a spread playing the downside to 140. Big drop yesterday.
yeah, we've both been looking at this and talking about biotech, and this is the reason what's held XLV down is biotech. It's just been complete. It should be normally a defense play, but biotech's being destroyed because of IBB. So
And this is the thing that, I mean, healthcare as a sector it's got different components. It's not exactly non-cyclical, right?
right.
There are areas that are more non-cyclical, like an MDT, right? That I'm cheering this sucker on to go to 76. It's actually a great opportunity to buy, right?
Yep.
But on the flip side here, IBB is highly cyclical. Most of these a good chunk of biotech companies don't even have a product. They just borrow money and issue shares of stock to live, right? And try to develop something. And who knows how intent they are because they've been existing for years and have done nothing and have no products. So there are leeches on the system. There's so many leeches in the biotech space. There are some decent companies. I mean, AbbVie, for example, this is a dividend aristocrat. I went through this yesterday, and we're looking at 155. We get down here, 155. Hey, we're going to look at the fundamentals and see, but this could be a decent buying opportunity. So I'm cheering AbbVie on to keep going, see
Mm.
where we can get. So again, with these dividend aristocrats, it's like a CD at the bank. You wait for the yields to get up. Okay, I'm going to put money in a CD. Okay, we're not putting it down low. We want to see these go down. We want to see the yields go up, provide better opportunities. So we got Lilly, which is also again a pharmaceutical. It's not biotech, is it?
They are, they actually do some, but they also, I'm just trying to pull up there really
That's not
quick.
really the sign, but the reality is, I mean, RFK is again. We'll see if we can get all these appointments through, but um, he's certainly again for this space, it's some difficulty, right?
Mhm. They're the insulin. They do a lot of insulin,
Yeah.
Humulin, insulin, stuff like that. So still considered a biotech and pharmaceutical, but a lot of insulin based stuff.
Exposed. So,
Yep.
what's your target here on Lilly?
Well, whoops, I just closed out that. Uh, what did I just do? I just closed my own chart. Hang on. On on Lilly, I'm looking at actually buying it here near 775 with the idea that we're going to go all the way back up to 907 at some point. But right now on the rollover, I'm I'm looking for this to clear the 770 takes us down to 700. So I'm looking at a 10%
Okay,
decline and then buy at 700. So if it
just
bounces
kind of
here,
a
I
long
like it
term
up.
double top.
But yeah, if it bounces here, I'd be willing to buy it. But if it doesn't bounce, I'm looking for 700, a drop of 10%.
Nike's a company you got on your list here, Barrisley. We rolled over
Hmm.
reasonably at 71. I mean, this does have a lot of China exposure, right? I mean, Under Armour had less exposure. I'm not sure they've really divested themselves of China. I mean, this is one that, again, lower consumer demand. I mean, we saw
Yep.
the earnings back here. I mean, this is
Nike's my substitute for consumer discretionary minus Tesla,
mm,
and
there
it's
we go.
pretty close as far as the ratio goes. Same thing with with Levi.
Yeah.
Any brand name stuff, I'd say watch out. But we're running out of time here, Brandon.
Oh, Don saying wrap. All right, we're at 722.
Yep.
All right,
So
folks, we'll wrap it here. We'll catch you back next week. We'll have another week to digest. But anyway, Blake, it's been a pleasure. Thank you, everyone.
hey, thanks everybody. Have a good day.